Let's take a look at a double top in the chart of Advanced Micro Devices, or AMD. We have the stock in a clear uptrend. It's moving up here. We have a pullback in the stock. And then another attempt to go through a resistance level, the high that has been set by the stock previously, and then a move down in the stock. As it breaks through this level right around 31, that's the point where we want to go short the stock. So you can see we have the M pattern. As the bulls are in control, they lose control and the stock pulls back. But if the stock were to continue higher here in late September and break above this resistance level, then the bull move would still be intact, but the stock doesn't. It pulls back. Now, if it were to hold this support level now and move higher, it would still be a buy and still be in the bull pattern. But the stock breaks through here in late September to the downside. And when the stock breaks to the downside, that's when we want to either sell our long position that we've held during this bull run, or we may want to go short the stock as it completes the double top pattern. So that's a double top in AMD reversing a bullish pattern with the stock now in a bear trend. Now let's look at a double bottom in the stock of Intel. The stock is in a bearish trend. It makes a bottom here right around the 33.5 level. The stock bounces higher. The W and M pattern do not have to be perfect. The stock then comes back, retests the low for a second time, and then finally moves higher, goes through the pullback high, and continues higher. It is at this point that we would have either covered short positions we may have had in the stock or go long the stock as it completes the double bottom pattern and moves higher to the upside. So that's a double bottom in the stock of Intel. In a head and shoulders pattern, a stock is in an uptrend. It reaches a high, pulls back, and then reaches a subsequent higher high. And at this point, the uptrend is intact as we're making higher highs and higher lows. The stock then pulls back a second time, attempts to make another high, and is only able to climb as high as the first high in the pattern. So it's now in the process of making a lower high after this second pullback, and then the stock continues to make a lower low when it breaks through the neckline of the pattern. And the neckline is the trough of the first two pullbacks. So what we have going on from a psychological level is that the stock is performing as it should, making a higher high and a higher low, but then that pattern reverses itself, and we have the stock making a lower high and then a subsequent lower low. This tells us that the bull trend has come to an end, and the stock will either move into a consolidation pattern or may move into a bearish pattern. The result is that the pattern looks like a head and shoulders, with the shoulders being the two lower highs and the head representing the highest high that the stock makes in the pattern. So when you break down the head and shoulders pattern, as I just said, it's the stock moving from a pattern of higher highs and higher lows to a pattern of lower highs and lower lows. So let's take a look at a head and shoulders pattern on a chart. Let's use a chart of 3M for our head and shoulders pattern. Here we see the stock is trading on a daily basis, and we see the stock making a new high here, continuing its uptrend. The stock then pulls back, rises higher. So this first high is our shoulder, and then we have a head here. The stock pulls back again to this level, attempts to rise, and our second shoulder, it doesn't get quite as high as the first shoulder, and then the stock moves down. Now in this case, the stock breaks the neckline, which is here. So we have our head and shoulders pattern complete, and then the stock rallies again, but it's unable to close above the high reached in the second shoulder. So our trade remains intact. If we're to go short the stock, we want to use the high of the second shoulder as our stop. And with the stock not having a close above this high, we would have maintained our short position, and then we can see the stock falls off, moving from this 80 level down to the 74 level. A perfect head and shoulders pattern is fairly rare in the charts, but as we can see, this pattern holds the psychology of the trade, where we're making higher highs and higher lows, and then the stock reverses to making lower lows and lower highs. And again, we can use that second shoulder as our stop, because that's our resistance level now with the stock. So if we take a short position at the neckline, we can use that second shoulder as a stop for our short position. A reverse head and shoulders is just the opposite. You'll have a stock in a downtrend. You'll make a low, rally back up, make a second lower low, which is the reverse head, rally back up, and then make a third low that matches approximately the price point of the first low, which would then be your second reverse shoulder, and then rally above the upside down neckline. And with that pattern, we would go long the stock, or definitely cover our short position if we're short the stock, which has been in a previous downtrend. So that's the head and shoulders pattern in the stock of 3M. Triangles, flags, and pennants are continuation patterns in either an uptrend or a downtrend. Our graph to the left shows a flag continuation pattern in a bullish uptrend. The pattern represents a price consolidation with minor support and resistance levels. We can use these support and resistance levels as buy signals in the trend. If you'll remember, we talked about exponential moving averages and how we could use those as support levels to give us buy signals and sell signals in a trend. We can use triangles, flags, and pennants in the same way. So what we're looking for is the stock to pull back in a bull trend, and when the stock breaks the upper portion of the resistance within the triangle, flag, or pennant, that break can be taken as a buy signal for the stock. The same is true in a bear trend when the stock is trending down and then pulls up in the pattern to form a triangle, flag, or pennant. When it breaks the lower bound of support in that pattern, then that is taken as a signal to enter the stock on the short side. A flag, which is represented here on the graph, looks like a rectangle. A pennant looks like a symmetrical triangle, and a triangle looks like a triangle on the chart. And we can have both ascending and descending triangles. So let's take a look at triangles, flags, and pennants on a chart. Let's look at our first pattern, which is a flag pattern in the chart of Intel. Intel was trending up. So we have the stock in an uptrend. And we see a pullback in the uptrend here. That's the upper bound of the flag. And here's our lower bound of our flag. After this 3-day pullback, on the 4th day, the stock breaks the upper bound or the resistance level of our flag and moves to the upside. This could have been our buy signal, or we could have purchased the following day after it was clear that the stock had broken this short-term flag pattern. The stock continued to move up from here, which is around the 25.5 level, up to around the 29.25 level before turning down. So this was a continuation flag and a bull trend in Intel, and gave us a buying opportunity when the stock pulled back. Now let's use the chart of Qualcomm to look at a pennant pattern. We have Qualcomm, and we're looking at an hourly chart, and you'll often see flags and pennants and triangles on hourly charts. They can help guide your trading on a shorter term basis. So if we look here in July, on July 18th, we see that the stock is moving up, has a slight pullback, and then continues the bullish pattern. And then for several hours, we have a pullback here and support here, which is around 50% of our green candlestick, which is also an important number. And here we have a pennant. So when the stock breaks out at the end of the pennant pattern, it moves up, comes back and holds the support level, and then moves up a little more. We then have the stock coming back and testing this support level, which we can continue to draw here, and then moving up, bouncing off support, moving up, bouncing off again before it finally moves up off the 58 level, back up to the 62 level and beyond. So our pennant ended up being longer term support on an hourly chart, which we could have used to keep us in a long trade until the stock finally made a move higher. So that's the stock of Qualcomm with a pennant pattern. Again, breaking out to the bullish side of this pattern, coming back, touching support several times, and then finally moving higher. The cup and handle pattern is named cup and handle because the shape of the trading pattern of the stock looks like a teacup. You have a bowl-shaped pullback in the stock, and then a move back up, which forms the right-hand side of the cup. We then have a pullback in the stock. Ideally, it will be to around the midpoint between the lip of the cup and the base of the cup, but is often more shallow. And then we'll have a move up in the stock from the downward sloping cup. And when the stock breaks the downward slope, that is the buy signal for the cup and handle pattern. The cup and handle forms a resistance pattern because the lip of the cup on the left side and the right side is a resistance point, and then the handle looks like a flag pattern as the stock pulls back after touching resistance a second time. So psychologically, you've had owners of the stock who have been underwater as the stock pulls back into the base of the cup. When the cup gets back to the right-hand side of the lip, you're back at resistance. So the buyers who purchased there and have been underwater the entire time the cup has been forming are now selling the stock and pressuring it, which causes the handle of the cup, your flag pattern, as the stock moves back down from encountering selling pressure. And then you have a move out of the handle to the upside, which is your buy signal. As a secondary buy signal, you can use the resistance level, which is formed at the lip of the cup. So let's take a look at the cup and handle pattern on a chart. We're going to use the chart of AMD Advanced Micro Devices to look at a cup and handle pattern. The beginning of our cup is here. We have a pullback, and I've drawn a curve so we can see what the cup pattern looks like. The second lip of our cup is here. And then we have a slight pullback and a flag pattern. And ideally, we would want the handle to come a little bit lower into the cup, but the psychology is the same. The stock has hit the resistance level formed by the left side and the right side of the cup. When it touches that resistance level, you get sellers who purchased the stock back at the end of June and are now back to even, and they're selling here in October. This forces the stock down, and then we get a break of both the resistance level and the handle, as well as the resistance level for the cup overall. As we can see, once that resistance level is broken to the upside, the stock continues to move up. So we get a movement from $16 all the way up to around $25 for the high of the stock. If you'll remember, we talked about earlier that a support or resistance level that has been in place for a longer period of time usually gives you a bigger move than a support or resistance level that has been in place for a short period of time. With a cup and handle pattern, we are looking for a move that would equal the measurement from the base of the cup, which in this case was around $11, to the lip of the cup, which was around $16. So we're looking for a $5 move, the difference between 16 and 11, when the stock moves up. We actually end up getting a much larger move than the $5 that we get from not only 16 to 21, which would have been the $5 move here. And we see this stock encountered a little bit of resistance at this point. It was able to break through, retest this resistance level, and then move higher up again, as we talked about, to the $25 level. So that is the cup and handle pattern in the stock of AMD.